Good afternoon and welcome and thank you for coming. I am, for those of you who don't know, I'm Luigi Zingales, Faculty Director of the Stigler Center, and we are very happy today to host Sir Paul Tucker for a 3-day mini course on the problems of legitimacy for central banks in democracies. Before I welcome Paul, let me say a few things. Number one, we are on record live streaming, so please silence your phone. And know the usual swearing, Paul, but joking. As you may know, the Stigler Center has many initiatives, so please check our website. There are two in particular I would like to highlight. The first one is that this Thursday and Friday, we will host a conference on the political economy of finance. And next week, we will have another mini course on corporate political influence in the United States with Brian Richter, who is visiting here for this quarter. Now, back to today's topic. We look forward to hear from Paul's insight. Now, generally, I dislike people that write books after being in office because they tend to be either justification of what they have done wrong or a usual list, this is generally CEOs, that says what everybody should do because they've done right. And Paul's book is none of that. The first time I spoke with him, he said, we in Britain, we don't do memoir. We only do memoir when we're dead, and so they're published posthumously, but we don't like no reference to any US politician. When they step down, they tell all the story, the dirty secrets they were supposed to keep quiet, and they do it for sort of millionaire fees in the book. The other thing that is remarkable of Paul is that while he's in very important position today, for those of you who don't know, he used to be, for many years, the Vice Governor of the Bank of England. And for his service at the Bank of England, he has been knighted. So we could call it Sir Paul Tucker. But when he stepped down, instead of joining a bank board, like most people do, he actually joined the Kennedy School. That's the only mistake. He should have come here. But and he's a chair of the Systemic Risk Council. So I think that he is different in many dimensions, and his book is different because it's a very scholarly book, not only for his size but also for his content, and really a book that crosses many disciplines in a way that academia very often is not very good at doing. So. We are delighted that he agreed to distill all his wisdom in 3 lectures. And without much ado, please welcome Sir Paul Tucker.
Well, Luigi, thank you very much indeed for inviting me to do this, and to everybody for giving up their lunchtime. And I hope you're going to give up all 3 lunchtimes. I should thank Luigi for the encouragement that he gave me in writing this book. When I started going around the world from my new base at Harvard, talking about how we needed to attend to democracy and the rule of law and thinking about the design of central banks and other regulatory agencies, many, certainly quite a few, economists and former central bankers would say, why on earth are you going on about democracy? And there were a few people, of whom Luigi was one, who said, well, that's exactly why you've got to write this book. Now, let me see whether I can use the slides. Yeah. The book, which is on sale outside, has a subtitle. It's called Unelected Power. And its subtitle is The Quest for Legitimacy for Central Banks and the Regulatory State. But for these lectures, I thought I would use a slightly different subtitle, How Technocracy Should Retreat to Preserve Our System of Government and Its Own Contribution to Welfare. And I decided to do that, not because it's going to have any bearing on the content of what I say, but because in the course of presenting the book on both sides of the Atlantic, perhaps particularly on this side of the Atlantic, I occasionally meet with the comment, but central banks and regulators should just do whatever's necessary to make sure that the economy and society is working okay, because we can't rely on Congress to do it. And I think that that instinct, which is kind of worthy, it's certainly well-intentioned, is kind of only part of the explanation for the backlash from the people. Because the truth of the matter is that every single part of government, broadly defined, will eventually fail, sometimes persistently, and the people get fed up, and the people will react badly when the people that they see governing them are not elected. And that, in a sentence, is what the book is about. It's a course of 3 lectures. The third will be exclusively and wholly about central banking. The book was motivated by 2 things. First of all, I happened to be in office at the Bank of England after the crisis when the financial system was redesigned, and in particular, the powers of the Bank of England were recast, with many more powers being given to the Bank of England. And I was leading our team that negotiated with the executive branch and the legislative branch. We resisted some of the powers that people wanted us to have. And on those powers we were given, we were quite insistent about the constraints that we thought should be placed on us, as I then was. And I wanted to write a book about what lay behind that. In a nutshell, it was because we did not want to be overmighty citizens. So issues of legitimacy were certainly in my mind, and I think in Mervyn King's mind, who was governor of the Bank of England during that period. This lecture will be a bit broader. This lecture will be quite dense in a way, but nevertheless feel free to interrupt while I'm speaking to ask questions of clarification, and then we can have a broader discussion when I've got through my slides. And the reason this is quite dense is so that it kind of sets up the material that I will go through in the third lecture on central banking, and tomorrow's, which is about whether anything I'm discussing is truly feasible in real-world democracies, and in particular this democracy. And that will end on a slightly pessimistic note, but with determination to kind of improve the world. The basic thesis, as I've suggested, is that I worry that too much government power now lies in the hands of unelected officials, regulators, central bankers, and activist judges. And certainly that's increased over the last decades. It's been gathering pace in the US since the progressive era, and in particular the New Deal era. And I'll say something about those agencies a bit today, but more tomorrow. In Europe, it's really taken off, including in my own country, Britain, since the 80s and 90s, when the state moved away from public ownership of parts of the economy to having a more market-based economy with state regulation. And as I've suggested, I think that it's not the exclusive threat, but I think that this puts at risk public allegiance to our system of government. Not in fast motion, but in slow motion. And I think the solution has the form of a political norm, so things that people would generally believe in across the political spectrum about how delegated power should be structured. And a key part of where I'm going is that the principles for delegation that I will set out go beyond the kind of legal liberalism, or liberal legalism as it tends to be called here, that has dominated scholarly discourse on these issues. Now, as I said, I was motivated to get into this by the extraordinary power of today's central banks, including power that I held when I was in office. I was in office for about 12 or 13 years. I was a central banker. So I was on the staff before that. I was a central banker for about 33 years. Compared with when I began in 1980, the central bankers have become the poster boys and girls of unelected power around the world, ranking really only with the judiciary and the military, who I think have something to teach us. During the crisis, they acted within their legal powers in ways that no one had really contemplated before. Quantitative easing, buying government bonds in order to bring down long yields, that had been contemplated in the UK before. In fact, a variant of it was done in the 1980s. It wasn't perceived as revolutionary in the UK as it was here. Credit easing, buying and lending against private sector securities so as to steer the allocation of credit in the economy. That kind of blurred the boundaries with fiscal policy in some respects. It's risky and it shades into the business of picking winners. Lender of last resort, which is lending to, in principle, lending to sound financial intermediaries that are suffering liquidity distress, but fairly or unfairly, there is a perception on both the right of politics in this country and the progressive left of politics in this country that the Federal Reserve stretched beyond the bounds of central banking principle in its lender of last resort role. But the thing that really changes the debate is that compared with a couple of generations ago, it is now back in fashion for central banks to be the formal regulators of banking, and in some cases beyond banking. That's true of the Fed, who got new powers, the Bank of England, who had its powers returned to it that were taken away in 1997, 98, and it is now true of the European Central Bank as well. And this means that the central bank is not only part of the fiscal state, as I call it, it is part of the regulatory state. And the reason that does matter to me is that debates about the legitimacy of the regulatory state, because the regulatory state issues legally binding rules and regulations, that debate has tended to be completely separate and conducted amongst legal scholars from the debate about the legitimacy and warrant for monetary independence, which has typically been conducted by economists. And part of my argument is these debates can no longer be segmented when you have these institutions that occupy both spaces. I need to be quite careful with you about the definition that I use of independent agency. And this is particularly important in the United States because legal scholars here use the expression independent agency in a rather special and actually rather misleading way. I mean by an independent agency that is insulated from the day-to-day politics of both elected branches of government. So for those of you that are American citizens, can I ask how many people in the room are American citizens? So about half. Okay, so for American citizens, and for those of you that are familiar with American government, this means that under that definition, the Securities and Exchange Commission, the Commodities and Futures Trading Commission, the Federal Trade Commission, the Antitrust Agency, the Communications Commission, these are not independent agencies as I define them. And the reason for that is because they are subject to annual budget appropriations from Congress. And I can absolutely assure you, a year is nothing in public administration. If you have to go back for your money every year, and I'm not suggesting it's a bad thing at all, but if you have to go back for your money every year, you are sensitive to every little shift and change in congressional sentiment. By contrast, the relatively new, created by Dodd-Frank Consumer Finance Protection Bureau, is an independent agency on my definition. We'll come on to this, but it doesn't actually satisfy my conditions for delegation to independent agencies, so I don't think it should be. The Federal Reserve and the Federal Deposit Insurance Corporation are both independent agencies. I think if that's the definition of independent agency, to be independent, I think three attributes are required. First of all, control over the delegated policy instruments. Secondly, job security. If you can sack the policymakers at whim, they are likely to be sensitive to your wishes. This is in US speak, this is for cause protection. I'll talk about that more tomorrow. And budgetary autonomy, or at least not having to go back every year. For what it's worth, the institution I served, the Bank of England, had to have its budget approved by Treasury and Parliament every 5 years. I guess I'd have preferred it to be a bit longer than that, but that was long enough to insulate us from. There was a kind of a crunch every 5 years or so, but only then. So why does legitimacy matter? It matters because the resilience of our system of government matters in a world where, as I said, every single part of government will mess up from time to time, and sometimes persistently, and sometimes in a big way. And representative democracy is very special in my view, and I discuss this in one of the chapters of the book, not just because it's our system of government, but because it separates how we feel about government, the government of the day, from how we feel about the system of government, because we can vote out our governors, except of course that we can't vote out our unelected governors. So the more of government that is in fact delivered by unelected officials, and I say somewhere in the book that it seems to me that the marginal lawmaker in this country is either a regulatory official or a judge, then the more fragile one starts to make the system of government, because the people will start to lose, as government inevitably stumbles about, the people will start to feel discontent that they can't change the government because the system of government has drifted away from them. So with that said, what are the justifications that are typically offered for delegation with insulation, independent agencies? Now, there's one stream of thought, which I will touch on only very briefly, that says it's fine to have independent agencies, and in fact we should have them, but only for adjudication of individual case-by-case disputes, so applying a statute laid out by Congress or by Parliament. But we should not delegate rulemaking power, because rules are legally binding norms, and it is Congress and Parliament that should issue such laws. And people who hold that view, and there are many such people in the United States who hold that view, typically will appeal to something that John Locke said during our own political revolution in the 17th century. The difficulty with it as an argument is that it's slightly naive about what adjudication of disputes does. I mean, we see this in the common law. What happens through the judges or a regulator taking a series of decisions is that they articulate a general policy. Well, they affect a general policy, but they haven't articulated it as a general policy. And it would be more visible to us if it were a rule than just something that is encoded somehow into a set of precedents. So there's a difficulty in arguing that independent agencies should only do adjudication. We're really arguing for opacity in the making of legally binding norms. A second justification that is offered is that it's all warranted by expertise. And I think this argument is deeply flawed, but it matters a lot, especially perhaps in this country, because it was the centerpiece of the justification offered for the New Deal delegations to the SEC and all the other agencies created during that period by a man called James Landis, who was at Harvard Law School, and then I think chair of the SEC, certainly helped design it, and was on the commission at the FTC. And the difficulty with this is that it takes a step too far. Of course, expertise matters, but there's nothing to stop us having agencies, independent agencies, who publish advice to politicians who take the decisions. And such systems exist around the world. For what it's worth, it's how UK monetary policy worked between the early 90s and 1997, 98. So expertise can't of itself be a justification for having independent decision takers. The best justification, I think, in terms of the necessary warrant, but it will turn out to be another necessary but not sufficient condition, is the importance of credible commitment. There are lots of areas of public policy of which monetary policy is definitely a major one, which don't work at all effectively unless people believe the promises that government makes. If I say I'm going to hold down inflation to a particular rate, but you don't believe that I will, you think I'm going to allow inflation to rise to 6-7% or even higher, it is much harder for me to keep it at 2% without inflicting a recession on you, and I might flinch from doing that. So the less you believe that I'm going to keep my promise, the harder it is for me to keep my promise. So why should technocrats be better than politicians at keeping promises? It's something to do with their incentives, and it's something to do with how we can shape their incentives. And there are two lovely papers on this by Alberto Alessino and Guido Tavolini, published about just over a decade ago. And they point out that what politicians really want to do is be re-elected. And to be re-elected, they've got to ensure that the people are better off today or in the near term. So if they have an objective, a statutory objective, to deliver something over the medium to long run, but actually they could improve the people's welfare by deviating from that objective today, well then they are going to be sorely tempted to do so in order to get re-elected. In fact, they will almost certainly do so if sticking to their objective, their statutory objective, would cause them to lose the next election. A technocrat, by definition, isn't running for election. And either intrinsically or because we can shape the regimes in a way that procures this, technocrats may care about their public reputation and professional reputation for delivering the job that they've been given. Now, there are some big assumptions behind that. This only works in societies that are capable of bestowing esteem. A society that was completely cynical about public officials is a society where the technocrat can't generate a public or professional reputation for themselves by sticking to their mandate. And you notice that by starting to think about what lies behind the economics, one gets into, moves out of economics into questions of culture and politics. But the big problem with just leaving it there, which is where, I mean, I'm being a bit unfair, which is where many economists have left it, which is these are issues of credible commitment, is that problems of credible commitment run through almost every part of government. Just over 20 years ago, Alan Blinder, who at one time was vice chairman of the Federal Reserve, wrote an article in Foreign Affairs saying, and part of me thinks it was tongue-in-cheek and part of me thinks it was completely serious, and I kind of change which of these I think Alan was up to. But he said, actually, if the argument for an independent Fed is so good, why don't we move loads more of government into bodies like the Federal Reserve? And I recoil at that, so I kind of hope you do. I'll find out whether you do. My God, why don't we want to do that? If it could be done better by people like me, why wouldn't we do that? I mean, this is something to do with our political values, the values of democracy, of participation, representation, of trial and error, changing the government in order to try a new policy, of the rule of law, both the predictability, generality, and transparency that would be emphasized by some, but also the fairness and due process. But in truth, we require of both branches, but we're probably tougher in applying that to unelected officials, and constitutionalism as well, the separation of powers. And the book explores what these values mean for the design of policy institutions. The values are not monolithic. What typically happens when people go down this road is they say, our political values are the following, and then someone from the constitutionalist right or the libertarian will set out one set of values, or someone from the participatory left will set out another set of values, and they'll say, given these values, this is what should happen to the design of the state. And I think we learn a lot from that exercise. What we don't do is get to a solution, because these values aren't held by everybody in our society. Each of those values, each of those particular conceptions and justifications for democracy and the rule of law is held by large communities, but nevertheless not by everybody. And this is one reason why legal liberalism is insufficient. So by that, I mean that there has been a legally valid delegation by a legally, properly elected assembly of politicians. And the agency is required to comply with the provisions of administrative law as policed by the judges. And that just leaves out entirely our Republican values, the value of involving the people, that it will somehow be government by the people, not just of the people, and at least be kind of for the people. And how can we know whether it's government for the people unless we allow the people in? And what the book does is it conducts it doesn't look for a lowest common denominator, which is what I associate with John Rawls's overlapping consensus. Instead, what it says is, if these are the demands of the various different traditions and values that are part of our political history and part of our conception of ourselves as a political community, well, then we need to satisfy each of those values or conceptions. And that adds to this piles up the requirement on the design of delegation with insulation. So my principles for delegation to independent agencies have three components: delegation criteria for whether to delegate, design precepts for how to delegate, and multiple mission constraints for agencies that have more than one mission. As I was discussing earlier, the central banks definitively now have more than one mission. So what are the delegation criteria? A summary of them would be, and some of these are going to sound innocuous, and I'm going to suggest that they're not quite as innocuous as they look. Well, the first would be that there should be broadly settled preferences, broadly based support for the purpose, the public policy purpose of the delegation. And here we would have a big contrast, I want to suggest, between, say, environmental policy and financial stability policy, or indeed monetary policy, for that matter. Many people do say that the EPA in this country, the Environmental Protection Agency, should be an independent agency pursuing a particular conception of environmental policy. And I disagree with that. And the reason for that is that for as many, I suspect there are many people in this room who are pretty fed up with the EPA and its current leadership, but there are many people in the country who are applauding. Whereas there are not many people who are arguing for we ought to have higher and more volatile inflation. I suspect that there are broadly based preferences in favor of price stability. There are even fewer people, I would suggest, maybe a few people in the financial services industry, who argue we ought to have more financial instability. We either ought to have crises more frequently, or when they come, they ought to be even bigger. There is, in both of those fields, there is broad-based support for the purpose, price stability and financial stability. There are disagreements about how to go about it. But so when I hear people screaming about the EPA, I think, well, if it's not going to be independent, it's going to be politically sensitive. If it's going to be politically sensitive, the policy it pursues is going to be dependent on the outcome of general elections. There was one. It changed the course of policy. To win the argument, one has to persuade a lot of people. It takes a lot of time. I'm not saying I think any of that is good. I think it's just a fact about. Remember, I'm talking about legitimacy rather than about justice. I've talked about credible commitment. The big one here, and it's really got two parts, but I'll come back to in the third lecture. We shouldn't be in the business of delegating big choices, I want to underline choices, on distributional issues or our high-level values. Where did parliaments come from? Parliaments came from a desire that taxation should be decided by an assembly rather than by the king, by Congress rather than by the president. And that's because there are distributional issues, resources moving from one part of the community to another, and that should be settled by politics. And that is one of our deepest values. What about how? The first of these will do a lot of work for where I'm going, and will be at the center of what I talk about tomorrow. So the first of the how design precepts is that the legislature should set a clear objective that can be monitored, and that it should do so after public debate. Now, the Federal Reserve, although price stability and maximum unemployment are in the statute that creates the Federal Reserve, in fact, the Federal Reserve, within those vague terms, it sets its own objective. So by my lights, the Federal Reserve regime does not meet this criterion. And we could discuss on the third lecture how they could go about mitigating that. I think they've kind of taken a step towards mitigating it, but not as big a step as they could have taken. This matters, this constraining the agency via a monitorable objective helps to protect from capture. I'm not saying it by regulated industries. It also helps to protect against something else. It's commonly said in this country for generations, but particularly over the last couple of years, personnel is policy. Well, personnel is not policy, actually, if the objective is absolutely clear. If the objective is set at an inflation rate of 2%, and the executive branch and Parliament, Congress, the President appoint members of the board of the central bank who then visibly pursue an objective of 5% rather than 2%, well, then they have deviated. They'll be called out. They'll be called out, provided there is public support for the purpose. So this constrains, doesn't completely eliminate, but constrains the ability of a president or prime minister to suborn the agency, undermine the Parliament, Congress's delegation and insulation by appointing their friends or fellow believers. The second thing is that decisions should be taken on a one-person, one-vote basis after deliberation. This matters for all sorts of reasons. It probably produces better results, but beyond welfare-type considerations, it disperses power. It aids public debate by revealing where disagreement is. And this last point is to do with welfare. It reduces the chance that a single policymaker would surreptitiously substitute their own view of the goal for the view of the goal that they had been given. Some policymaking bodies are one person, one vote, but are too big to do proper deliberation. I believe that to be true of the Governing Council of the European Central Bank. I think the FOMC, the Federal Reserve's monetary policy making body, is pretty close to being too big for good deliberation. And there are plenty of published accounts of how these bodies conduct themselves when they meet. And what they don't describe is a deliberating body where Luigi is a member of the committee and he says something and I really don't agree with it. And I say, well, hold on, you can't be right because of ... And he says, oh yeah, you're right. And reversing it, I certainly found myself in that position quite a few times on the monetary policy committee of the Bank of England, where your colleagues would say something and it would change your view and you'd realize the mistake you made in your analysis of the economy. You can't do that in a setting where people are reading out scripts with limited opportunity for exchange. The third is, and I'll come back to this in the third lecture, this is very important for what's known as macroprudential financial stability policy. Power should not be used in ways that interfere unduly in liberal freedoms. So I'm not abandoning liberalism, I'm just bringing republicanism in alongside it. In Europe, this is known as the principle of proportionality. It stems from Prussia. It's well known to your justices. They tend not to use the European word for it. The fourth is that the independent agency should publish operating principles that explain how they aim to exercise the discretion granted to them in a systematic way, in a way that is consistent and fair over time and over different cases. And a criticism of central banks is that there were no operating principles, or not sufficiently clear operating principles for how they would conduct themselves as the lender of last resort, but instead ended up improvising and acting in an inconsistent way. And it doesn't matter for my purposes whether that's true. It matters that it is a fairly widely held perception. The fifth is that there should be sufficient transparency both to enable public debate and, most crucially of all, to enable oversight by committees of the Assembly, Congress, Parliament, where the most important thing that the Parliament or Congress is doing is deciding whether or not to sustain the delegation. And I want to tell you a story here. I appeared before our Parliament, the Treasury Select Committee, many times. And on one occasion, I was sitting next to Mervyn King, the governor, and what you would call the ranking member, the senior Labour Party member, they were in opposition, a man called George Moody, said to us, mainly to Mervyn, but to me as well, we both had to answer. He said, so you come along here, and we ask you all of these questions, and you give us eloquent, clever answers, and then you go back to your building, and it doesn't make a bit of difference. If we've indicated that we aren't happy with the policy that you're pursuing, it doesn't make any difference. What's all this for? What are these hearings for? And we said, we both gave the same answer, which is, well, you've given us, you, the Parliament, have given us independence under statute, and it is our duty under the law, and I would add as Democrats, to go back and act as we think is right on the mandate that we've been given. But that you can take the independence away, and that these hearings are designed to, the key purpose is for you to decide whether to sustain the independence. Now, I want to say this quite gently, is that is not the same as an attitude of we must defend the independence at all costs, that it is for us to argue for independence. No, it is for the people that we as citizens to elect to bestow. They can take it away, but the central bank or the regulator must testify in a way that helps the politicians decide whether to sustain the delegation. Two more sets of requirements. This is tremendously important, and we'll come back to this on Wednesday, perhaps right at the end today. So what happens in emergencies matter? What happens when there is a crisis, a disaster affecting the country in any area, but let's say the economy or the financial system, and this independent agency is right at the edge of its powers in one of two senses. But actually, it's latently got the capability of being the US cavalry and rescuing the world. I want to say two things. There's a massive debate in political theory about whether it is inevitable and acceptable that the executive branch will just do whatever it takes. And Eric Posner in the law school here wrote a book with Adrian Vermeulen at the Harvard Law School called, I think, Madison Unbound, which argues that it is both inevitable and acceptable, and Congress will turn a blind eye, or they will shout afterwards, and the court will allow it to go through. And my position is that whether or not that is true and good or right for the elected executive branch, we can't allow that to be the case for unelected agencies. I want to say two things. that if agencies get to the edge of their powers and latently could do more, then it is up to elected politicians to redraw the bounds of the remit, the bounds of the legal delegations. It's unlikely Congress should do so, would do so, and so in this country this would have to be a delegated power to Treasury and the President. I doubt whether they would give it. The other variant is where you are within your powers, but you would use them in a serious way, in a big way, in ways that hadn't remotely been contemplated by anybody. In those circumstances, I think you should go to the elected executive branch and say, not do you approve or do you agree, but do you strongly object? And I think Mario Draghi should have done that when he rescued the Euro area project in late 2012. I think he should have gone to the Council of Ministers, or actually an intergovernmental mode, which we could talk about if you're interested in that. The multiple mission constraints will matter a lot on Wednesday as well. There is a fine tradition in political science, both empirical and formal, that if you give an agency two missions, actually if you give anybody two missions, they will pursue the one that is more salient. So a central bank on this argument will always put more effort into its monetary policy function than to its regulatory function, because people are interested in the monetary policy function all of the time, and they're rarely interested in the regulatory function. And, you know, this is a serious matter. I mean, I believe that it looks as though this risk crystallized in the Greenspan Fed, and that contributed to the crisis. And I suggest that sometimes, though, two missions are so intimately connected that you can produce better results if they're together. And in those circumstances, those are two conditions for having them together, but there should be a third one, which is that for each mission you would have a separate policy committee where a majority of the members on each committee was on that committee and on no other committee. And there'd be a minority of members who are on all of the committees, but the members on each committee, the majority of members on each committee, they would have incentives to take that mission seriously. Now, this isn't theory. This is what lies behind the three-committee structure at the Bank of England. I wanted to ensure, going forward over many decades, that if the Bank of England had governors and deputy governors who were more interested in one mission than the other, that wouldn't lead the Bank of England to neglect the mission, the function that those particular officials weren't terribly interested in. That's not a risk at the moment. The people at the top of the Bank of England are interested in all of it. But this risk would otherwise face them and similar bodies eventually. The Federal Reserve kind of meets this, not completely. I've got 3 more slides. Let me give you, and the examples are not from, first one isn't from central banking at all. The second one is part of central banking. And the third one, I want to step back a bit. Antitrust. Antitrust is typically delegated around the world to independent or quasi-independent agencies. In this country, both the FTC and the Department of Justice. It is typically framed in statutes with highly, highly vague objectives. In this country, the Sherman Act, the Clayton Act, and some others. Antitrust policy in this country, and because of this country, elsewhere in the developed world, changed absolutely massively, spread over many years, late 60s, 70s into the 80s, as doctrine moved from the so-called Harvard School to the Chicago School, based on developments in economics. And I'm not today quarreling with the substance of the change. It was made by judges. There was no consultative papers. It was what happened was that people who wanted to change the doctrine of antitrust realized the best way to do it was to educate the judges, which they did very effectively from the Chicago Law School. This meant that all sorts of things happened in our economy, and there were concentrations of economic power that there wouldn't have been otherwise. I underline, I'm not saying whether that's good or bad in welfare terms. It may well have been better. But in terms of what I'm saying, that is a decision that should have been taken by Congress, or at least been blessed and debated in Congress. It wasn't. The other example reveals a tremendous thing that bureaucrats like me hold to. So in the field of banking supervision, the so-called prudential supervision to ensure that banks are safe and sound, you will meet two propositions advanced with vigor. One is that it is immensely important that these bodies be independent. That is in the so-called core principles of banking supervision issued by Basel. It is a principle that is supported and applied around the world by the IMF. Bank supervisors will also say it is absolutely vital we can't tell you or publish what we're doing, because were we to tell you about the condition of individual banks, it might bring about the problems that we've been charged with preventing. Therefore, historically, it's changed a bit since the crisis. Zero transparency. You can only tell how they're doing when inevitably it fails. So we must be independent. We must not be transparent. At one point, actually, at the Bank of England, when in the earlier period, when we had both monetary policy and supervision, the supervisors locked the door and wouldn't let the rest of the bank into their area. And Eddie George, who was the then governor, who other than Paul Volcker was the greatest central banker I ever met, he was kind of rather fed up about this and set up a committee to look at a one bank policy and appointed a supervisor to head it. So this was a trust regime, a trust us regime, and I'm saying a trust us regime does not fit with our deep political values. And if I'm pressed on this, and many of my former colleagues would press me, if it is essential that banking supervision be untransparent, then I would prefer to have it under political control. I would prefer for it to be done less well, but fit with our values. And that's because I think the resilience of government matters most. Now, so here we come to welfare versus legitimacy. This is my last slide for today. The critique I meet most in the United States from what I call Hamiltonians, many of my friends, particularly people that have served in high office, this is all very well, but look, we've just got to make sure the people the government works well and that welfare is preserved or improved. And of course I agree with that. I devoted 33 years of my life to it. I don't think I was, may not always have succeeded, but I didn't think I was completely wasting my time. And if you don't like to think of it in terms of legitimacy, if that feels ethereal, think about it in terms of sustainability. Political regimes break down. I mean, this is, and our system of government, the one that we developed over the past 2.5 centuries, has proved fantastically flexible, partly because we have managed to combine liberal protections with an ability for the people to change the direction of government and letting the people in. And if we shift too much power to the technocrats, if we step by step embrace technocracy, then we will end up with the worst form of populism. Tomorrow I will be more concrete. On Wednesday, I will be more concrete still about central banking. What I wanted to do today is tell you where I'm coming from. Thank you very much. I invite questions.
Okay, let me start with a question about the environment versus financial stability. I think you exaggerate the difference because I think in the environment, nobody wants a more polluted world, like nobody wants a financial instability. Of course, it's the cost that matters. And like there are banks that, of course, they want financial stability, but they don't want to pay the cost. The same is true for the environment. If everybody wants a cleaner environment, except they don't want to pay the cost. So I don't see this dramatic difference between the two objectives.
Well, I would make 2 points. I mean, of course, you're partly right. It's hugely more charged amongst the public. So members of the public, whereas with financial regulation, and I mean stability regulation, not all of the other things that go on in financial regulation, the parties that tend to argue for lower capital requirements or whatever tend to be from within the industry, or the people that they've sponsored in Congress. The public as a whole are kind of less engaged with this. They just want people to ensure that we don't have the disaster that we had a decade ago. But I mean, I think the other point I'd make is the more important point in a way, is of course you're right. Because there could be a long-term trade-off in financial stability policy. And what we need is for politicians to somehow find a way of agreeing on a trade-off that is bipartisan for environmental policy. That looks to be a long, long way away. I mean, it doesn't look to me as though the current leader of the EPA and his political backers in Congress could agree where the trade-offs should be with the previous leader of the EPA and their backers in Congress, whereas I think that's kind of feasible in the financial stability field. Right behind you and then at the back. Oh, okay, you've got the mic, sorry.
Sorry.
Yeah.
I just wanted to follow up on that question quickly, because it strikes me that one of the differences with financial stability and environmental issues is a question of how tangible those issues are to the general public. The media has much more of an interest in establishing a broad-based debate, which leads to differences of opinion in the example of the environment that it does in relation to something like inflation. But you could imagine a major debate around, for example, if newspapers ran a campaign that price instability and high inflation would reduce student debt levels or whatever else, reduced, transferred funds from asset owners to debtors. You could imagine a political disagreement akin to the political disagreement in the case of the environmental example. So I'm just wondering how you factor in the role of the media in establishing what is and isn't controversial in your notion of what has broad-based support.
I think with price stability, if you go back to the 1960s and 70s, the media debated exactly those things for price stability. That we should have looser monetary policy in order to kind of pump up growth or help this part of the community, and because that went so pear-shaped in the 1970s here and the 1970s well into the 1980s in parts of Europe, including Britain, those media debates went away. I mean, it was that the media themselves seemed to come to the view that there weren't big long-term trade-offs that you could have politicians exploit. And I mean, there's a case for doing something for students, and there'll be a case for not doing something for students. And that's kind of fiscal transfer, and we have parliaments and Congress to do that.
I think this mic works, yes. So instead of trying to tweak a bunch of small levers, which would be getting individuals to think in terms of long-term incentives, have you had thought to perhaps it's time to tweak bigger levers like the tenure of elected officials?
Oh, are you coming tomorrow?
I plan to.
Okay, well, let's come back to that tomorrow. Where I'm going to end up tomorrow is that it's not obvious to me that that this country, with its constitution, readily achieves what I call incentives, values, compatibility. I think that members of Congress do not have strong incentives to set clear objectives. I think they have incentives to delegate, shed blame, and be vague. And I think those incentives are quite deeply ingrained in the Constitution and the whole structure of government and party structure that it has led to. And I don't think that's compatible with the values that underpin the Constitution. Now, if that's right, by the way, I think it's the most important thing that I say in the book. If it's right, then it leads to a whole separate set of questions about what kind of constitutional small c, including norm changes, would you require. For example, I mean, looking at the two gentlemen in the front row, when Eric Maskin and Amartya Sen proposed changes in the voting system so that it's kind of truly majority voting for the presidency, I thought, no, you have to take account of the interaction between the different branches of government. You're not going to fix this just by tweaking one set of parameters, because the incentives that I'll talk about tomorrow are how the different branches interact with each other. Somebody at the back has been waiting for a while.
Thank you very much for a fantastic lecture today. I'm looking forward to the next two. A couple of questions. One is, I want to make sure I understand how you're applying your criteria to your assessment of the Federal Reserve in its handling of the crisis, as in, did they step beyond the powers that they had, or was the flaw that they didn't adequately justify it afterwards or provide adequate transparency, or do you think they handled the crisis
I don't know. I'll probably talk more about this on Wednesday, but I don't know whether they went beyond their powers. Some people think they did. Some people think they didn't. I think they initially lost one court case on AIG, but then that was overturned on appeal or something. But my point is rather this, that whatever the legal position, which gets determined by the courts through the normal process, there are people on the right and left of politics who think they did. And central banks everywhere, and not only central banks, they can, in a self-interested way, they can protect themselves against this and actually get closer to meeting our political values by being more open about the principles they will apply. So to be concrete, central banks have said so much about how they go about doing monetary policy. There are still debates about whether they should follow rules. But they have debated the design of monetary policy regimes in every dimension very actively for 30 or 40 years. The literature on lender of last resort, on the design of lender of last resort regimes, is incredibly thin in comparison. Even though we know it's tremendously important, partly because Doug Diamond and a co-author, Phil Dybvig, showed how the banking system is prone to runs, and therefore liquidity insurance can be one of the remedies. And my urging here is that to the extent that monetary policy regimes have been, let's say they've been well designed, I want everything to meet that kind of standard if you're going to insulate it from day-to-day politics. And I don't think the lender of last resort regime were. The complaint in the UK, by the way, is completely opposite from here. It is that the Bank of England didn't do enough, wasn't an active, in 2007, that it wasn't an active enough lender of last resort. That also happens when there's not sufficient clarity about objectives and therefore about expectations. Doug?
You identified as one of the tricky issues, sort of the emergency and getting to the border of powers.
Yeah.
How do you think about emergencies where the proper response is somewhat difficult to determine, particularly if you're not a specialist? Sort of going to, you mentioned maybe you go to Congress and they can say, don't, or they don't. But how do you get them to decide? I mean, I know of the problems of getting people to accept the TARP in the US.
So this is easier in parliamentary democracies than it is in the kind of system that the US has, because in parliamentary democracies, the executive branch can go to the parliament, and the definition of parliamentary democracy is that the government can get its program through. And so when I was at the Bank of England, we were given more emergency powers, as was the Treasury, through the crisis at points of need, without the free-riding type voting that went on in Congress during the TARP and various other things. But I mean, ideally, I think in this country, Congress would delegate to the Treasury Secretary consulting the President a power to, subject to constraints, to authorize various actions by the Federal Reserve. So you could have, to be concrete, the Federal Reserve is not allowed to buy private sector securities. You could have a provision that says Federal Reserve shall be allowed to buy private sector securities in pursuit of objective X, where the Treasury Secretary, having consulted the President, both determines that there is a, I'm making up these words, a systemic crisis, and that doing action X would help to mitigate the crisis. And when I suggest that kind of thing to former colleagues over here, they'll say, well, Congress are never going to agree to that. And I say, well, I don't mean by Christmas. But actually, my experience on both sides of the Atlantic is that you can win debates in slow motion. Sometimes it'll take 10, 20 years to win debates, but that's a short time. First question for a woman, I'm relieved.
Yeah, thank you so much for taking my question. So you've been saying that how unelected, power in the hands of unelected officials could be a worrying trend. But how do you see them as a way to balance the populist approach of, politicians, where both of them balance each other out, where one is, more prone to votes, where the other is maybe.
So somebody said to me at dinner in New York last week, my God, Paul, you're talking about problems with unelected power. We've got problems with elected power. We should be pushing more. I don't want to get into the particular details of politics here, but I think part of the dismay with our elected politics on both sides of the Atlantic is because we've shifted so much that matters away from elected politics. There's nothing like having a proper job to kind of make you try. And I think in a sense, my message isn't to the unelected power holders, it's to the elected power holders. Constrain and debate unelected power, your delegations of power, more carefully than you have. Someone immensely eminent said to me, my God, Paul, you seem to be wanting to debate central bank independence. And I said, no, I just want to put it on a firmer footing, because if we don't, that's how it will get sacrificed. It's not that it's true that there are some independent agencies around the world which I think should not be independent. But I also think there are threats to agencies that should be independent, and those threats would be smaller if they were better designed. And I don't want to claim that this is the biggest thing in current politics. The geopolitical changes are bigger, but I think it matters a lot. And to kind of give that some color, it matters a lot when people are writing columns and books saying, look, China's doing really, really well. It's what we want is a meritocracy. Well, my country did better in the 19th century than it did in the 18th century, and it did better in the 20th century than it did in the 19th century. And that was because we became more sensitive to the people's wishes, and that's because of moving gradually from elite representation to semi-franchise democracy to full franchise democracy. I mean, it makes the system more resilient. To come back to where I started, it's being able to sack people is just the most incredible thing, not because we get pleasure out of it as citizens, because it enables us to correct for mistakes. So I believe. We're done. Thank you very much.